Hi, I'm Scott Starratt with Starratt Wealth Management. So the month of June was a little bit weaker for markets as we move into the summer months. And two big picture items I want to discuss this video is going to be clarity and liquidity. So on the clarity piece, really there's been a lack of clarity since the new US administration took office in January of 2025. And it should come as no surprise that there continues to be a lack of clarity, whether that's clarity around the CUSMA negotiations or the USMCA, depending on what side of the border you're on, or whether it's the war in Iran, or whether it's tariffs. And this lack of clarity has created a great deal of uncertainty within the markets. Now, often that uncertainty, and you may have heard of the term called wall of worry, where, as long as there's people that are worrying about what's going on with the markets, then, the markets can actually be quite productive and move higher. We do feel, however, that the clarity feature is now hitting a point where there's just too much uncertainty out there. And whether that's what's going to happen with interest rates due to higher inflation due to the war in Iran, or whether it's to do with like I said, the negotiation between U.S., Canada, Mexico, or whether it has to do with any of the other many factors that go into the global economy, that lack of clarity has reached a point where we do feel that we have to be a little bit more selective and a little bit more defensive in our positioning. So not that we expect things to get to the point where, we see a huge massive drop like we did in 2008 or 2000, but we do think it is prudent that we do take action in order to protect what has been essentially a very, very strong year for equity markets over the last few years. And one of the biggest ways to do that is by having liquidity. When it comes down to it, can either go into two different scenarios if markets were to take a big drop down. The first scenario is knowing and feeling that you have really good high quality investments, whether that be high quality stocks, high quality bonds, or other type of investments in the portfolio, and you know that it'll always recover. And so you just sit on your hands waiting for it to recover, knowing that the companies that you own are going to be really, really good companies for the future. The second option is to have liquidity available so that you could take advantage of that opportunity. Now, you aren't always going to be able to pick the bottom, nor are you going to be able to pick the top. If you do, I guess you're either very lucky or your crystal ball is working a lot better than most people's. And so our view on that is that having money on the sidelines allows you to take advantage of those opportunities and without having to just recycle or sell some of the investments in the portfolio that may not be working at that time. You can do that as well. And usually a downturn in the market does present an opportunity to look at things and determine whether there are better opportunities elsewhere. But I would say that having cash or liquidity of some sort in the portfolios allows you to take advantage of those opportunities even faster. One of the things that we've learned over the last few years has been that, and I'll preface this by saying that at some point this isn't going to be the case. I don't know if it's going to be this downturn that may be coming or whether it's going to be a future downturn, but prior to, let's say, the last 10 years, any downturn that we've experienced, and I'm talking the big ones, whether it be 2008, 98, 87, 2000, has been a real big market downturn followed by a period of time where things just kind of bump along. Eventually a recovery comes and everybody moves on. But that recovery time often will take months or potentially even years, depending on what you're invested in. In the case of the last few years, what's happened is the recovery time has been very fast. So you would refer to this maybe as a V-shaped recovery, where you see a large drop down, and then you see a recovery happen sometimes within a day, but often within a weeks and definitely a month. The most recent example of that was here in April, March, where we saw a big downturn in the market. We saw that recover through April. And we also saw that happen in COVID. It was a little bit longer. It lasted a couple of months or a few months. But again, we saw the big downturn in March of 2020, and we saw that recovery occur, in the months to follow. And so that part is the unknown, but like I said, having liquidity allows you to take advantage of that opportunity, whether it's going to be a long-term downturn or whether it's going to be a short, aggressive downturn and recovery. So client portfolios, we are ensuring that we are balanced. Again, we aren't making a big call here by saying sell all your stocks, run away, the world's going to end. But at the same time, we do feel that it is time to take a little bit more money off the table. If you do have any questions about any of this, or if you're listening to this and aren't a client yet, and your advisor may or may not be talking to you about this right now, please do reach out. Obviously, any of our clients, please reach out to Jim, myself, Angela, or Alex. More than happy to chat more about this and to go through things a little bit more in detail to your particular portfolio. Other than that, hopefully you have a great Canada Day, a great summer, and we'll be talking to you very, very soon.